Capital Wealth Counsel is an authorized financial service provider. For all your financial needs, please contact us at www.capitalwealthcounsel.co.za.
Good morning, my people. Welcome to Capital Wealth Counsel. It's a pleasure to be back with another video, just to continue the journey of educating, providing financial literacy to our clients and subscribers to the channel and the entire society at large. Those that are new, Capital Wealth Counsel is a YouTube channel that provides you with info tips around financial planning, investments, insurance, and managing your insurance portfolio, making sure you've got the right cover in place and why you need that type of cover. And obviously giving you info tips on how you can be efficient in managing your own financial affairs. With the guidance of a professional, it becomes easier and you can grow your wealth over time. Today, I decided to maybe just touch a little bit about why we all might probably need life insurance in our portfolio, given point in time through our different life stages. And depending on how much wealth we create, you probably find that there are costs that are attached to unwinding estates or even just looking after your financial dependents. And if you're the breadwinner, obviously someone will need to take care of that cost and provide for their living expenses in the event that you are no more. I'm just going to firstly show a screen and maybe do a dummy calculation on how would effectively calculate those costs and why you need that insurance policy. And then you can all relate. But I mean, this does not constitute financial advice. It's just general info tips and information that we're sharing, so you have an idea of why some of these insurance products are essential in your portfolio. In this scenario, we firstly have to obviously always have an objective. Objective number one, meaning being we need to provide, if in the event of my death, 10,000 Rand per month for my child's living expenses. In this scenario, I've calculated a 10-year window. So if I die today and I need to provide income up to 2034, 10,000 Rand a month, we'll then move to scenario number two, which is predominantly around getting the 4-year-old chap, junior banda. A total cost, present value today in 2024 costs you around 936,078 cents. And you can see here, we tried to break down the costs from pre-primary school. If the child goes to a creche costing 2,150, that will be 62,724 for completion. In private primary school, average cost of 4,415. You would have spent 374,000 Rand, 536. And then you tally up all these costs in high school, undergraduate, and postgraduate comes to about 936,078 cents. And the final cost, maybe prior to my death, I just recently bought an asset, an apartment where I live, 2-bed apartment worth 1.2 million. This becomes a liability in my estate. And the scope of this analysis is predominantly based on life insurance or life cover. And you could also add disability or even dread disease to the planning. Remember, this does not constitute financial advice, so you need to sit down with one of our qualified professionals to tailor-make your solution. But ideally, 10,000 Rand available monthly. The capital needed is 1,066,752. And then we've got 1.2 million to pay for the apartment. There's executor fee, conveyance costs, capital gains tax in the event of my death to transfer the apartment to my next of kin. That adds up to now 1,576,595. And we plus the cost of child's living expenses, 10,000 Rand a month, equivalent to 1,066,000. And then we've got the cost of education at 936,078 cents. Ideally, you see that the shortfall or the amount of life cover you would need is about 3,579,426 to be able to provide sufficient income for your family to remain comfortable even in your absence from the day you're gone, and the risk scenario again broken down below. And these reports will definitely be available to you once you sit down with one of our qualified financial planners or your dedicated financial planner to help you understand why life cover becomes an important purchase in your portfolio. As you'd have seen, to provide for a child with 10,000 on a monthly basis between 2024 and 2032, I think that was the scenario in that idea. But a DLA 20-year provision of a 10,000 rand monthly income, increasing that amount with 6% on a yearly basis, equates to just over R1 million. And not all of us are fortunate enough to have 1 million rand sitting in our bank accounts. So you then pass that, or you finance that funding through an insurance company that can afford it. So for a small premium, you take out R1 million life policy that should be able to provide at least 10,000 rand to your loved one in the event of your death, untimely death. But also further to that, we then looked at a scenario where you also need to provide for the child's education. In that example, it turns out to be around 936,000 rand over the child's term until they complete their first degree or postgraduate. Already we're looking at 2 million rand. Again, if you're the only breadwinner who's working and providing for the child's living expenses, then somebody needs to be responsible for that 2 million rand. And I think it would be unfair for you to pass that responsibility of funding for your child's education to your extended family members, brothers and sisters. They could look after the child, but the role would be easier to provide that much needed financial outlay for them to be able to, cover those costs. But as we move through this life journey, you would probably find that we get into debt, or we're trying to create wealth. You finance a property, a car. And in my example, I think I put somebody that's starting out in life, just bought my first apartment worth 1.2 million that was financed by the bank. Again, we need to protect that asset, and the easiest way again is through insurance. And then you'd probably have another life policy or increase that existing life policy with a further 1.2 million to be able to provide the family with the much needed cash to settle the house. So your heirs have a fully paid asset. There's money available to fund for the child's education costs, and there's money available to cover their day-to-day living expenses such as clothing, food, and entertainment. All this is just a simple scenario. Yours might be different from the next person. That's why it's always important to consult with a qualified financial planner who can guide you through a financial needs analysis and paint a picture of the situation that's specific to your circumstances. Ideally, as you go older, that's why we always say, financial planning is not an event, ongoing journey. You will then, through your annual reviews with your financial planners, your broker, your advisors, adjust your plan as time goes by. Because if you were to have a second child, we then need to make provision for the second child. If you were to acquire more assets, we need to make provision for those additional assets. I think in the end of that example, I showed that besides paying off your debt, when your properties needs to be transferred to the new owners, it's a deemed disposal in the eyes of SARS, meaning it's a transaction. So your house will need to be deregistered and re-registered into the new owner that you're leaving that property to. And that process is similar to actually what you went through when you first bought that property, where you had to pay lawyers, you had to pay conveyancing fees, registration and all that. And all that costs money. Again, like I said in the beginning, that will always be sitting with a substantial amount of cash in their bank account to provide for such costs. Therefore, the life policy will provide that much needed cash lump sum to the family to be able to pay the executors' fees, to be able to, pay fees, transfer duties, pay off debt, and leave some money aside or set aside to pay for your child's living expenses on a monthly basis, big transport, extramural costs, entertainment, clothing and like, as well as pay for the child's school fees and the like. So all these scenarios, yes, at some point it does seem to be grudge purchase if you're struggling financially, but it's a very essential purchase. And you'd find that as you get older and your kids and your dependents grow and become financially independent, you then, again, by way of sitting down with your advisor, with careful planning, you can either start the amount of life insurance you have so that you can maybe allocate some of that money towards your retirement planning. But for other people, the scenario might be the opposite, where you actually probably need to buy more life cover because you've got more financial dependence and responsibilities that need to be looked after. So I would encourage you to always, maybe once or review your policy, your life insurance. Maybe you need cover for disability or rare disease to also protect you in the event that you are incapacitated and unable to work. I think in this video, I'm mostly focused on death, which is promised. They always say, things that are promised in a society is death and taxes. If you're working, you always pay some tax or to the revenue authority. And then eventually all of us at some point we will succumb to our, in this life, no one motto, I believe. So those two are promised, and we gotta make sure that we've got a plan in place to provide for those similar events should occur. But more to risk planning beyond just death. I mean, you could be involved in a terrible accident and your income gets, reduced or even stopped, and out of that you could then have an insurance policy that also mitigates that risk to provide for you and your loved ones living expenses, pay off your debt, pay off your mortgages, your loans and all that. So there is a lot, hence consultation is key to the fact. For those that would want to delve further into these subjects, you're welcome to leave your comments below or visit our website, www.capitalwealthcounsel.co. You can chat with us on WhatsApp, directly on the website, or leave your details and somebody will contact you, professional, to guide you through the process. Alternatively, just comment down below. Please don't forget to like, subscribe, and so that you'll be the first to be notified whenever we upload new videos, and keep you informed, educated, and help you protect the wealth that we all striving to build over the years. And thank you so much for watching. And like I always say, it's a quid pro quo. You pay a premium in exchange to take over the risk that you probably cannot afford to insure yourself. So watching, and on the next video.